Hello, I'm Jamar Jackson. Today I'm here with Joanne Brady. She's a loan officer in my office here at Keller Williams. And I brought her in to ask her a few questions about the home buying process. And I hope these questions will be very informative to my buyers, my first-time home buyers. They have a lot of questions about FICO scores, pre-approval and everything. So we're going to go over all that right now. The first question I have to Joanne is, what's the first step in buying a home?
Well, the first step in buying a home is getting what we call pre-qualified or pre-approved. What that means is that you sit down with a loan officer like myself, and you actually bring in your paperwork, your bank statements, 2 months bank statements, your proof of income, which is your tax returns or other proof of income that you have, and you sit down and get pre-qualified, where that means that we sit down together and we actually decide what you're capable of buying. And that way your agent knows what price range to look for. And you can then have an offer. You then will be given a letter, and you can present that letter with their offer.
Okay. What's the difference between pre-qualified and pre-approval?
Well, let's say on a pre-qualification or a pre-approval, you could call me up, give me some information, fax it to me, and I could issue a pre-qualification. It just means that some information wasn't re-verified. But a pre-approval means the information was verified, meaning that you actually brought in the paperwork or that you were able to give me everything I need.
Great. Okay, we all know the credit industry is going through a transition right now. Why don't you tell my buyers what the minimums are for buying a home now? What are banks looking for?
Well, that's a really good question, because right now I think you all have been hearing about the FICO scoring system. And there are several types of basic categories of loans. There's FHA, which means you're government insured, U.S. government insured. VA, which would be like a veteran. And then there's conventional. Most conventional loans use the FICO scoring system, which means we run your credit report from all three bureaus, and the three bureaus gives a score, and this score is what they use in determining what programs are good for. Now, the problem with the FICO scoring is that you have to be very careful. Your score, a good score, right now, for most first-time buyer programs, which I think is what we're targeting here, you're looking at about 620 on a conforming loan. However, what if you don't have that score? If you have no credit on first-time buyer programs, no credit is better than bad credit. We can use things like your phone bills, your cell bills, bring us in a statement, and we can use that as alternative credit. We use things like make sure you pay your rent on time and try and pay your rent with canceled checks. We can use that as a credit reference also. Now, FHA, which is government insured, we have not been hearing that much about in the last few years, because I know, as you know, property values have been jumping up so much. FHA is a government loan, and a lot of people like them. FHA does not look at the FICO score. They look at your credit. So, which is really good, because the FICO scoring system, it's just, to me, it's been kind of bad, because you can have a client that has a great score and they have 130-day late and the score goes down dramatically, and it's just not fair. So FHA says you don't have to have a minimum score of 620 or 660. It has been getting harder. There's a lot of good deals going now, but because of the foreclosures that's been going on, lenders have been becoming more conservative. But you, as first-time buyers, we do have other options.
For say if I'm a buyer and my credit score is 650 or high 500s, right, what should I be doing right now instead of looking for a home?
Well, there's a couple of things you can do. One is you can join something like, they call it, I think it's free credit report, where you can kind of monitor your credit report monthly. You want to keep your balances down on your credit cards. Keep them down to, I would say, somewhere around 50% or less of what you're approved for. So if you have a credit card with a limit of $300, try and keep the balance around $150. If you want to, before the end of the month, pay down the credit cards, even if you're going to go reuse them again next month, because guess what? Those FICO scores change in the beginning of every month. So you want to keep and monitor and keep your FICO score going on. Okay, that's okay. That would be one of the things. The other thing is you don't want to move money around. If you've got money in a mattress, or you've got money people, relatives are giving you, get the money in the bank account so it can become seasoned. And get with someone like me who can sit down with you early and kind of give you a strategy or a plan.
Yes.
That's important.
A plan is very important if you're planning to buy a home. Another question I have, a lot of my buyers ask, what percentage of the home value or the price of the home as far as down payment are banks looking for in closing costs?
Okay. If you are a first-time buyer or you have not owned property in the last 3 years, you can still buy with no money down. No money down loans have gotten harder to get, but for first-time buyers, if you're buying under, at this point, $417,000 or less, which that is the conforming limit now, but it's going to go up, you can buy a home still with no money down. If you can pull money down, you need to come in with something because you're going to have the closing cost. You're going to have closing cost of 2 to 3%. So maybe instead of you going with a no money down, you would instead use the 2 to 3% to go FHA or a zero down loan or whatever, and then ask maybe the seller to pay your closing costs. So it's more important for you now in this market that we're in right now. We're in September or October of 2007. Sellers are willing to pay the closing costs more than they were, let's say, a year ago, because it's a buyer's market, meaning that there's a lot of properties for sale right now, but not a lot of qualified buyers out there in the market. So you can name your price now at a good reasonable price, and then the seller right now is more willing to work with you than before. The market will change again, trust me. It's a constant changing. Right now that would be a good thing to do. So just pull together as much money as you can and be ready.
That's right. Okay, I want your opinion on this question right here. A lot of my buyers say it's a bad time to buy. What is your opinion on that? Do you think it's a bad time to buy real estate?
No, for the reasons I just said. For right now, for instance, the interest rates are low, and they want to keep the interest rates low because interest rates move everything in our world. So if the interest rates are low and you can get the seller to pay your closing costs or take a little bit less on that property, it's a great time. Because if you wait, for whatever reason, you think maybe the prices will be less, but guess what? The rates would be more, and you may have more competition out there on the properties because the seller might say, well, I've got 5 people who want my house. I don't have to pay your closing costs. So you look at the time of what's good for you to get in. Remember, it's a cycle. Are you in it for the long haul? No, this is not a good time if you want to go in and buy a property and think you're going to fix it up and flip it, or hurry up and fix it up and sell it and make a big profit. No, this is a good market right now for first-time buyers. You guys have not had as good a time as now probably in the last 2 to 3 years. It's a good time for first-time buyers. I'm very happy for them. And you can now go in and negotiate with a seller like you have not been able to negotiate probably, I'd say, for the last 4 or 5 years. So it's a good time, very good time.
Okay, thanks a lot, Joanne, for giving us all that information. How can buyers go about reaching you? What's your phone number?
Okay, you can reach me here at the Keller Williams office. My cell number is 310-529-7652. You can reach me by there, or my email is Joanne, Joann, Brady, BRADY, Joanne Brady J at AOL.com. Jamar also sees me daily, so you can give information to him. We can fax you forms to fill out. You can come in, whatever is easiest for you. We can email information. The key is just getting it started, taking the first steps.
I want to thank everyone for viewing this program today, and I look forward to seeing you guys soon. Bye-bye.